Hey, what is up, everyone? This is Evan Carthy from evancarthy.com, and today we are looking at the S&P 500 futures, Dow Jones, Russell 2000, and Nasdaq. This is going to be the weekly preview slash review for the week of February 23rd, 2020. So starting out with the S&P 500 futures, as you can see, since the top we had over here back on February 19th. Price has gone down from 33.97 all the way down the low down here at 33.28. So in the grand scheme of things, not a whole lot, not a big move. But of course, you only hear about the market just going crazy because there's been a low retracement, even though it's just gone pretty much straight up since President Trump was elected. So when you have these sort of swings for it, no big deal. We'll just play them with the support and resistance areas, because as you can see over here last week, this box up here is the 50 to 61.8, went down in there perfectly, came back up, and then this one right here is 61.8 to 78.6. so that is currently where we are right now. Now if this box does get broken, the price comes out of this and doesn't look like it's going to hold at all, then we go back and look for a lower support area. We'd look for something probably right around there. I'll just go ahead and draw the boxes in for it right there, and then right there. So the kind of vanilla background right there just kind of signifies to me this is an hourly, and then the blue just means it's a long, whether it's dark blue or light blue, doesn't matter. But let's go to the 5-minute chart up right here so we can see what had been happening. Friday was a pretty wild day. You had some big moves down before you had the recovery for it right there. I definitely took some trades around here when there was the support levels hitting up right there. But currently for it right now, we really aren't in any trade setups, because as you see, the trend has just been going on down. There was a 50% continuation trade down right here. See at the 50, 61.8, it's getting pretty close to hitting the 1.272. Definitely hit the 1.236, so that would be completed if you trade from that Fibonacci extension area right there. So that one setup there is done. But as far as any of the 5-minute charts for either expanding triangle or a 78.6 trade, there really aren't any. So what you have to do when that happens is zoom it back out a little bit. So you go back out to like the 15-minute chart and just start looking to see if there are any expanding triangles. Like here's 1, 2, 3, 4. There's a 5th one right there. So then you just back it up 1, 2, 3, 4, 5. Okay. So then you just go 1, 2, 3, 4. Here's a 5th one down here, but this one, as you can see, it came back and up and hit the 50% retracement level, got out of it. So that one's done right there. So now what would be in would be 1, 2, 3. This would be the 4th one we're looking at right here. But if you've seen any of my other videos, this wouldn't be one I'd be looking at trading for the 4th point, because I do take the 4th point out of an expanding triangle move. But when price broke this right here, that low, the 1, 2, 3, when it came down and broke 0.2 right here, and then came up and hit that 50% retracement level, I would consider that to be done, because price can definitely still go lower for a 0.4 move. It isn't guaranteed to go up and create a 0.5 move, so I wouldn't be looking at taking any more longs based upon this 0.4 move right here. So if price does get a big rebound next week, goes up over here, breaks this high right here at 33.9750, that would create the 5th point in the move right here, and then we'd be looking for a 50% retracement level, just depending on when where the pivot point high comes down, and or when the pivot point high stops it and then comes back down. So who knows where that could be, but that would be something on my radar, using a little bit longer of a time frame, because just on the 5-minute chart there's not a whole lot going on down there, and you can just see how he kept on having higher highs and then a little bit lower lows. 1, 2, 3, 4. There's a 5th one right there, came back down to 50% to complete that one right there. So that's currently what we're looking for right now. We are square in the middle of a support area for it, so there's no reason to believe that at the beginning of next week that there wouldn't be some support carrying out of here, and it may lead it back up into next week. If it doesn't, and if this thing does break down over here, if this support area does break down, then we'll be looking definitely for this area next. So anything between about 33.21, 33.07, I definitely would not be looking at messing with right there. But when it hits down this area right here, then I'll be looking at for sure looking at any long setups that formed between the expanding triangle trade and the 78.6 trade. So right now we're just waiting to see what happens. If the buyers do come in right here from the support area, and look for it to shoot up or break this high, be a positive week next week to go north of 33.98. If it doesn't, keeps on going lower, then look for the support area somewhere between 33.04 all the way down to 32.52. And with the coronavirus impacting the world, then there's no reason to believe that the market could not continue to move down as the week goes on, just depending on what new numbers coming out, whether you believe what China is posting. All right, so moving on to the Dow Jones. Here's a 5-minute chart. You can see over here that I had marked up from the trades that I took some this week. There were some expanding triangle moves. There you have 1, 2, 3. There's the fourth one, comes back up to 50%. Then you have one right here, 1, 2, 3, 4. Fifth one came up, hit the 50%. So just like we were in the S&P 500, we're a little bit in wait and see mode right here. And there you have a 1, 2, 3, 4 right here. If it comes down and breaks this low, that'd create a 5th point down right there for that one. So we'll just go ahead and mark that one up real quick. And what you definitely could do, because let me zoom out a little bit to the 15-minute chart. Actually, I'll just go out to the hourly chart, a bit easier to see. As you see right here, we are just south of a support box, and typically these act kind of like as magnets for price for it. The top of this is going to be the 50%. Let me just show you where I drew it from here real quick. There's that. So you see there's the 50% line. There's a 61.8, and down here is the 78.6. So that's just how I have it divided up between them. So I really do think that price will make a move down here in the Dow Jones market and at least go somewhere between the 15 and 61.8 as the week goes on. We'll see what kind of support that holds and if we get a move back up from it when it hits. But currently where it's at 28, about 980-ish, I would expect it to move back down here at minimum until about 28, 830-ish around over there as the week starts up for it. Then after that, we'll see if the support comes in and holds, and if it takes it back up like we're kind of looking for the S&P 500 for it. Here we have a 1, 2, 3, 4, kind of a real ugly expanding triangle down here, because if price does continue to go down and breaks this low down here at 28.103, that would create the 5th point of this expanding triangle move right here. Here we have a 1, 2, 3. So and then if price comes down, which is right, zoom in a little bit over here. I'll just go draw the lines right here. 1, 2, 3. So we'd be looking for some 4th point to come in down right here. So that's another reason why I'm expecting price to go a little bit lower down there. Create that 4th point, then start looking for some type of long setups. As you can see from that particular setup, the 1.272 doesn't go until it hits right between about the 60 to the 61.8 level right there. Then you have more entries. You have the 1.618 down at the 61.8 Fibonacci retracement level. So definitely looking for some more, or I say definitely, I could be completely wrong, but I'm looking for the Dow Jones is more weakness in the market as the week begins. Now we'll start the hourly chart over here for the Russell 2000. As you can see, last week price bounced several times and used heavy support in the Russell 2000 as it hit the 50% retracement level right here. Move that thing down a little bit. And it was massive support as it just basically bounced back up every single time it hit. The blue boxes down here, these represent the daily charts, and those are some super huge support areas. Let's see if they need to be updated at all. Nope, those are updated good right there. I'm just going to drag them over a little bit over here. There we go. And then drag that one over right there. And then we have this one all the way down there. There's a 50% box to 61.8. We'll just copy that, move it down over here to that one right there for those two. So those are some super heavyweight boxes right there, and price comes down into those moving forward. Then as you can see, it did once already. Price came back down, hit the 50, bounced up, or excuse me, 61.8, then hit the 78.6 and use that to launch it back up over there. Currently, if you are looking for a daily setup for the Russell 2000, it is in a 78.6% setup, to where if price. Hold on, let me make one more thing to check here real quick. Yeah, hit the 23.6. So as you can see from up here, price hit the 78.6 right here. So when it does that, and as long as this low holds right there, then we'd look for, where's the low bit right there? I think it's about right in there somewhere. If it breaks up above the shift pitchfork line, that blue diagonal line right there, let me zoom in a little bit more. If it breaks up above there, and then the first exit we're looking for is around 1712.2, a little bit short of that. But if price hits a blue line and then retraces back to 23.6 line before hitting the 1.272, then looking at enter there and then get out just south of the blue line right there. So it is in a valid 78.6% trade setup for the daily chart, which I don't trade off the daily time frames for the futures. Then just looking at the 5-minute chart right here, you have kind of an ugly setup for a shift pitchfork. What I draw it here, 1, 2, 3, 4. Yeah, there's a fifth one right there. That was a little bit, it's being a little aggressive with what it was, but it was a valid one. It came out and worked for it, so that one got completed right there. And other than that, just expecting, or not expecting really anything for this setup over here. That was one that's not valid right there, 78.6% trade. So just waiting to see what the market's going to do when it starts up. As you can see, every time it's dipped into the 50% retracement level right here, I mean, just massive moves up, down, pretty big move up, and now it's just kind of waffling about right here. But what this did create right here, now that I just noticed that, yep, is a valid 78.6% setup. So if the price comes down, breaks below, closes below that blue line right down there, then you do have a short setup right here, which would be one I'd be looking to take for it. So when it closes, or if it does close, it's not guaranteed to close below the shift pitchfork before it breaks this high up here. If it comes up and breaks a high, then the trade is invalid. But if it doesn't and comes down, closes back down here, looking to get in somewhere, and then the first exit would be at 1672.5, just a little bit north of that, probably about 1672.8. But when price hits the blue line, the dark blue line comes back up, hits the 23.6 line right here, I get in right there short, and then move both exits just north of the 0% line. So this trade setup is just a real short snipe trade, and just looking for small little gains there. Now, last but not least, we are looking at the Nasdaq. A whole lot going on in the Nasdaq this past week. You can see here from the support boxes over here. I'll tell you what, let me get rid of that thing right there. There is a lot of pardon me for losing my train of thought right here. A lot of expanding triangle trade setup right here. See price dip down to 50%, came back out, but that didn't seem to hold it. Now it seems like the 78.6 line is going to be some area of support for it. So we'll see leading off next week if it will hold, or if the market is going to move down some more. If it does, then we'd be looking at moving our support and resistance boxes to another level, which is that last really big swing low down there. There's the 50 to 61.8. Here is the 61.8 to the 78.6 setup right there, using kind of like actually probably go down to that low right there. Yeah, let's do that. There we go. So that's what we'd be looking for that. So if price does close below the 78.6 box, then we would be looking for the movement to continue down lower. Excuse me, down to around at least a minimum 93.43 for that first support area here in the hourly chart. Looking at the 5-minute chart right here, I didn't see there were a lot of expanding triangle moves from this past week, but currently we do have a 78.6 trade, but that thing is going to be super tiny for it right there. Let's see here. No, I'm sorry. No, that's not right. Sorry about that. There wasn't one in there because that high went and broke that one right there. So in Nasdaq, just waiting to see for this market what's going to happen for this one right here. Is 1, 2, 3, 4, 5? Yeah. So we are in a fifth point. Let's see, 1, 2, 3, 4. Yep, there goes the fifth one down there. So I believe we are. Let me go draw this down. Yeah, it didn't hit it. So we are currently in a 5-point setup. This in a trade I took. This obviously would have been a losing trade right there because my exit would have been just south of the 2.236% X right there. So probably would have gotten stopped out unless I got out for some reason, got out early right here. As you can see, it came up pretty close to 50%, never hit it, so it still is a valid trade right there. But usually I do have my exit right around that area, so it would have been really close if I was in it. But who knows? Didn't take a trade, so it really doesn't matter. But I just see price come down to 78.6 level. That is that support level, and is used it as some support. So this is still a valid setup for it. The exit you're looking for currently in this one is going to be the green line right up here. Let me put it on it. There you go. That teal line right there at 95.10 would be the hard exit. You always want to make sure I get a little bit sooner. So my exit, if I was in this trade, would probably be about 95.04, something like that. So currently a legitimate setup that is in the expanding triangle. So that is the review this week / preview for the S&P 500, Dow Jones, Russell 2000, and Nasdaq. To be honest, it looks like there could be some more downside in the market, but definitely won't know until it tells us what it's going to do. Is it going to continue down to the downside, or that it's now in these, for a lot of these trade setups, in these support areas or getting very close to it? Is it going to use those to continue to bounce out off of them, or especially like in the S&P 500 and in the Nasdaq? Is it going to break down out of them and then continue down to the next level for it? So that is my weekly preview for the markets. Take care. Talk to you later. Bye.